Hey there, real estate pros. Welcome to your midweek mortgage update. Get the latest rates and insights to boost your business. Stay ahead in the game with expert tips. Ready to make smarter moves in real estate? Let's dive into today's mortgage trends.
Hey there, realtors. Joel Willis, mortgage broker, here with you for your midweek mortgage update. Now, I know you can get numbers anywhere, and this update isn't just about throwing numbers at you. No, this is about giving you the insights and actionable strategies that you can use to close more deals, get those keys into your clients' hands faster. So, what's on deck this week? Rate buydowns. And these buydowns make the payments more attractive and affordable for the buyers, and are often at a better price or concession for your sellers than a straight price reduction. It's a way more effective way to solve problems in escrow and get these deals closed. Today's deeper dive, I'm going to show you all of the popular rate buydowns, how to calculate and show your buyers how much you can save them, and also show your sellers how much it will cost them. I've got a great calculator that can be yours, no obligations. Just if you like it, you see how it uses, just email or text me and I'll send it out to you. So let's dive in. All right, realtors. So I've got open here, I'm sharing a screen with the buy down calculator. And again, we're going to go through this pretty quickly. It's a great tool for you to use. This calculator is from United Wholesale Mortgage. I am a broker, go through a lot of different lenders. United Wholesale Mortgage, it's one of the biggest out there, one of the best out there. They have really good rates. They get stuff done really, really quickly. It's not a commercial for them, but they do provide us with great tools like I'm going to show you here that help us close more deals. So this calculator, after you see how I use it, if you want a copy of it, just email me or text me and give me your email address and I'll send it out to you. No obligation, no charge. If you want a personal tutorial, like, hey, Joel, I want to learn more about that tool. You went through kind of quick. I want all the nuances. Give me a call. We'll spend 5 minutes on the phone and you will be a master at this. So for this, and I'm going to be looking over this way. I'm not leaving you guys. I just need to see the other screen here where I have this on. This buy down calculator here. What I have this set for is a $700,000 purchase price with a $560,000 loan, so 20% down. You see there's other fields over here, borrower's name, property address. You can put all that stuff in there, save it, and utilize it for one of your presentations, for a listing presentation, for example. If you want to talk on concessions or speak with the seller who, like, hey, we're being kind of negotiated with here halfway through the deal because of some improvements or something that needs to be done. Let's talk about how we could use these credits rather than price reductions to make things work. So over here again, let's just take a look at the numbers today. At 700,000 purchase, 20% down gives your loan amount 560. This is where you enter the fields. Take a look at the rate sheet today. We're at 6.99% on that for a 30-year fix. So that's all of our fields there. Now we want to put 12 months payments per year. That is already locked in for us. So when we're going to move down, it's the gray fields that you can see. The buy down option types, and we're going to go through these and we'll talk about the most popular ones. But if you can see, as you see here, you got the 1-0 buy down, 1-1, 2-1, 3-2-1, and I'm showing all options right now. Really the 2-1, the 1-1, those have been the most popular. I think you'll see why when we go through it. But how the buy down works is on the 1-0 buy down, the seller concession, a seller is buying down the interest rate 1% for 1 year. So your borrower qualifies at the higher payment, but they're like, yeah, we're saving a little bit of money to do some improvements. We're probably going to refinance in a year. Might be a great way to go. So if you take a look at the 1-0, what it does is we have a 6.99% rate. It's bought down to 5.99%. You see what it does on the payment. It saves, and this shows you everything. Shows your client $368.05 is what it saves. That would cost $4,416.60 in seller concessions. So that's why this program here, this calculator, is really good, because you could use it to see all of this stuff all at once. The 1-1 buy down simply reduces the rate by 1% for 2 years. So again, that $368.05 saving lasts for 2 years. The cost of that is $8,833.20. I'm going to show you, let's take a look at how that cost works in comparison to just a price drop, because I think this really is a better bang for the buck for both the buyer and the seller. So on the 2-1 buy down, and this is the most popular right now, what this concession does is it buys down the rate 2% on year one. So for that first year, we'd be, instead of 6.99, 4.99%. It drops that payment $719.15 per month for the first year. That's very attractive to the buyers because affordability has become a problem in our market. Year two, 5.99%, drops it $368.05. The total cost is $13,046. Now think about that. Think about, hey, Mr. Seller, let's just round it up to 14,000. Mr. Seller, for a $14,000 concession or credit to buyer for allowable closing costs, we're going to attract a lot more buyers, or we're going to solve the problem that we have in escrow right now. Versus a $14,000 price drop. Let's see what that does. So if we go for a $14,000 price drop, I'm going to take a look at my notes down here. That would put our purchase price at $686,000. And then 20% down. Remember, the buyer's not grabbing all of that. If they're financing, it's a percentage of that. So 20% down will put that loan at $548,800, and that reduces the down payment by only $2,800. So it's not really saving them all of that money. Let's see what it does to the payment there. So this is showing you your actual note rate payment, $3,647.50. It was $3,721.93. That saves only $74.43 for that drop down in price. Now, rather than doing that, if you were to apply that to a buy down, and again, this is how to use this tool as an actionable strategy to solve problems and close deals. And I'm here for you. Give me a call. I'll be happy to go through this with your clients anytime. But having this stuff available for you, again, is going to give you more opportunities to solve those problems. A big part of what we do is solve problems and close those deals. So let's get that loan amount back up to $560. And we're going to go back to the 2-1 buy down. So for that 14, actually less than 14,000, you can see the concession is $13,046.40. Look what it's saving that buyer. It's dropping that payment down from $3,721.93 principal and interest to $3,278. That's saving them $719 for a year, and then for year two, save $368.05 a month. So you can see that this is something that is a lot more immediate of an impact for those buyers, because they're really concerned about the monthly payments. Hey, we could refinance in the future. Rates are eventually going to come down, but today this is a solution to get this done. Again, if you would like a copy of this, text me, call me, email me. I'll send it out to you. If you want to spend a little bit more time going over it on the phone, like, hey, I have this scenario, show me how to use it, I'm happy to do that. I'm Joel Willis, mortgage broker, and I'm here for you.